Yo, what is going on, guys? Today we're going to be talking about equilibrium and how to spot equilibrium in the market. I do need to get a light, bro. I have no light coming from this side of my room, and I got light coming from this side of my room. So I know I need to get that fixed. I need to go buy some type of desk lamp or something, bro, because you guys can't see me right now when I'm talking. So, you guys don't even care about that. Regardless, today we're going to be talking about equilibrium. Equilibrium is honestly going to be the easiest topic or like building block that I use. Obviously, all these videos are kind of all for myself too, so I can get better, learn and get a little bit better at using equilibrium and how it works. But I'm going to show you how to spot equilibrium today and how I use it personally. Right now I just sent it over to SPY or ES, and we are on a 4-hour time frame right now, and I'm actually going to show you how I used equilibrium in this past week, honestly. So actually I'm going to just make my way over back to QQQ and show you an equilibrium play that we had actually on Friday. Don't know why this is not working. Alright, keyboard was malfunctioning. So, as you see here, let me just remove all this. I know I don't want to actually remove the trade I took, but let me remove all this and then remove my equilibrium points already so it doesn't like spoil. But equilibrium is essentially price being in a discount, and essentially all it is. This is on a 4-hour time frame still, so it is from the high to the low. This is the low. Now I don't really like this because I can't really like drag it across completely even and honestly, but equilibrium, that 50% mark is right here, but as you see, price never has even retraced back into that point yet. And one thing about this equilibrium, that at this 50% mark, there is no other imbalance overlapping it. But if you do pay attention, we're gonna draw out this imbalance that we had right here. This is a 4-hour. This is a 4-hour fair value gap that we had price retraced back into. And if we scale back down to the hourly, you then see that we had another move up. We had a new high form. So this is hourly equilibrium, no longer the 4-hour, but we have this high to the low. The first low is right here, and the way I love using equilibrium is when price, like that 50% mark at equilibrium overlines a fair value gap. That makes trades a hell of a lot more probable. I don't know why I couldn't think of that word in my head, but that's literally like my greatest example of equilibrium right there. Like that is a perfect example. We have the 4-hour imbalance. We don't have a 4-hour equilibrium that meets it, but we do have the hourly equilibrium that perfectly comes into play with that imbalance, and that sets up a really nice trade. And let me show you guys more examples of this. I could literally find probably. See, the only thing is I don't want to go too far back, or else I'm not gonna be able to scale down that much. Let's make it over to Tesla because I'm gonna have way less of that marked out because I don't really trade Tesla. Oh yeah, Tesla had earnings, so I kind of want to avoid looking at when Tesla had earnings. We're gonna take it to the hourly too. But actually, I mean, I guess if we go to the 4-hour here, this might even be on a higher time frame. But if you guys pay attention, during this earnings, this was like that high that was formed, like that first high, ended up sweeping through. If you mark that out, if you mark this whole move up as equilibrium, eventually this was just a giant uptrend. So you could just mark it out to the high. Price retraced back into equilibrium. At this point, on a 4-hour time frame, we have multiple imbalances. This is probably a giant daily imbalance at this point. Literally, check this out, boys. So, I'm going to remove all that, but that's another trade. Like, Tesla right now is literally sitting in equilibrium. Right now, Tesla is more likely to be bullish than bearish, in my opinion, because it's entering all of these fair value gaps. It's entering the 50% mark of equilibrium. I think this is just going to be it's just a retracement tool. Essentially, like I said, the fair value gaps, it's a retracement tool. Equilibrium is a little bit of a retracement tool as well. I don't know why I made it like, what am I doing, bro? All right. Regardless. All right, check this out. This is another great example. This is on a 4-hour too. We have this low. We have this high. Price never really traced back to that 50% mark, but if you would have taken it from this gap, price ended up coming in back into this 50% mark. Never actually ended up filling this gap. Anyways, price came back to that 50% mark, rallied. I'm gonna find another example to the downside because I haven't done that yet. Check this out. High, low. What happened when price came back a little bit above that 50% mark? You see what we're filling right here too? We have this 4-hour imbalance. Price came down, came above the 50% equilibrium. While filling an imbalance, price came down for the next day, even continued in a downtrend. You could have made bank off this. Look at this solid entry. You could have set your stop loss right above this. You could have been targeting something like this, bro. It's a 4-to-1 trade. You could even went lower than that. Obviously, I don't swing trade, so a lot of the times I do trade. It's on like a lower time frame, so that's probably what I'm gonna make my way over to right now. Show you guys an example of how you can literally use equilibrium on the daily, and it literally works from any time that you see a high to a low. See where price ended up crossing back in. Price did end up coming over to that equilibrium. There's another imbalance right here. Bro, this is the sauce, boys. Equilibrium. The day that I discovered equilibrium is the day I fell in love with trading, bro. I swear to God, equilibrium, I damn near use it on every single trade, and it works, bro. This works. I've taken equilibrium on literally, look at this trade, bro. This was a trade I took on Tesla. Well, not on Tesla. Oh, this is just a forecast because I was not trading Tesla on the 31st. I was just back testing. See, I go and back test like random ass things. So, this is gonna be another example of equilibrium, sort of. I mean, hypothetically, this could have been a very short term, like high. Look, bro, literally, look. Ready? I'm gonna show you 2 examples now. High, low. Price came back up above that 50% point. We did have this mini imbalance that, did it get filled? I can't grab it properly. I think it did get filled. That literally could have been an entry. And then check it out. We came back up after that. We formed literally another one high to the low. 50% mark. Never really crossed over for this one. But we did have an imbalance that was aligned with it that price came back into. Rallied, continued to the downside. Bro, I don't understand why more people don't use equilibrium. Oh my god. Dude, every single time I start recording a YouTube video, I swear, bro, the toilet calls my name. Alright, we are back after that long session in the restroom. So let me continue my examples. I'm gonna go down the line. Let's find some fresh chart to look at. Alright, Jesus. Can't believe I went to high school for all these years. I'm just looking at charts now, dude. Oh my god. Dude, I've been graduated for like 2 years. Ended up just looking at a chart now. Holy hell. Alright. Regardless, let me just find more examples of how this works, and I'm gonna find an example of it not working. Because obviously life isn't perfect and it's not gonna work every single time. So we have this high, we have this low. I guess this is like, I don't really like this because it's so late in the day that like bias could so switch from day in to day out that like it completely like changes everything. This is another example. We had this hourly high, but we never actually had a retracement. Also, I wouldn't have really liked this. This wouldn't have been the best like day. I'm gonna like find an example of it like truly just not working. Oh, okay. I mean, I guess something like this. We never really have an imbalance here. Maybe if I take it... Oh, god I completely lost sense of where I was at. But that was an example of it not working. It's not going to work every single time, bro. The world's not perfect. But here's an example of it working. Not rallying, though. Gainbox. So I use Gainbox for it, too. You could honestly use... I've seen people literally use, like, just, like, the regular rectangles somehow, and then... Because I think with the regular rectangles, it still draws that 50% mark. Yeah. So even with the regular rectangles, I use my regular rectangles. That's for value gaps. So I've been using the Gainbox as a thing. And honestly, a lot of people, if you go into the settings of the Gainboxes, a lot of people like using the 0.61 mark because... This was not the proper way to do this from... Alright. So this is the equilibrium point. This is the 0.61. So a lot of people they treat this 0.6 mark a little bit more serious than 0.5. Personally, bro, I've been just going halfway through, dude. I don't really care. Now let's see if it's... Okay, I gotta fix this again. I actually don't want the 0.618. I might consider using it eventually one day, but not today. So... that underlines basically equilibrium in the full way it works. You could even go from to the high, price ended up retracing, ended up rallying. At the end of the day, bro, you got to look at equilibrium like this. Like, for example, the reason that equilibrium from this might not work, you know why? Price ended up coming back in. But look where we're at in the markets, bro. We're filling this massive imbalance right here. We're expecting a rejection to the upside. We're expecting price to continue rallying to the upside. So why would you even be looking for a short here? But regardless, you're gonna make those mistakes. Those are some mistakes that you're gonna make. I've made those mistakes, bro. I'm trying to minimize them. I'm trying not to have them happen again. This is like a market zone where markets was pretty much just chopping and equilibrium still worked. We have this high. See, the example is that sucks about equilibrium a lot of the times. Like, on lower time frames, they're not that great. Like, for example, equilibrium, because, like, look, from the high to the low, like, bro, you're not going to be trading any bullshit like that, bro. So, you're going to take it at least an hourly minimum I like using for equilibrium, even though it works on everything. High. Low. This is a perfect example of it, honestly, not really respecting. Let's see. I mean, hypothetically, this is a full day of trading right here. You could have used this as an entry for this day of trading, and you could have made money. You could have won this day. So I mean, it worked right there. You're in the 50% equilibrium. You expected that drawdown, and then you got it. And then you ended up getting this order block that price ended up sweeping, and then price continued to rally further. So, I mean, bro, it's literally how the market moves. I don't really think there's much more explaining to do with equilibrium. I hope you guys, understood a lot of the, thesis and what I talked about in most of this video. I hope you guys do have a great rest of your day. I am uploading this on election day. Go out and vote if you happen to watch this before your polls close. So, anyways, enjoy. Peace out, boys.